we didn't get a big spike in the price of gold on the open. Although what happened is after I did my podcast yesterday, which I recorded right at 4 o'clock Eastern when the New York market closed, gold spiked about 15 bucks in late trading. So if you're in the GLD, which is, the exchange traded fund, or any of the gold mining stocks, they did not get to react to that extra $15. Gold was really up about $75 an ounce on Friday. One of the biggest days I've ever seen in the price of gold. Maybe not percentage-wise, but one of the biggest dollar days I've seen. So in after-hours trading now, Sunday night or Monday morning out there in Australia, Japan, the gold is trading off about $10, $11. So it's still higher than it was when I recorded my last podcast. But the reason that gold is pulling back right now, and in fact, if you look at stock market futures, and I'll pull them up, the markets are trading higher. Dow futures are almost up 200 points right now, and the NASDAQ futures about in line. The small cap Russell 2000 are the strongest in after hours trading. This is a relief rally that I don't expect to last. And here's where the relief is. So over the weekend, there was a lot of drama in Europe, and it really started Friday evening, and it kind of continued up until Sunday afternoon. And the drama was that UBS in Switzerland, the largest bank there, was going to buy Credit Suisse, which is the smaller, troubled bank that I've been talking about for some time. Credit Suisse shares closed at $2 on Friday. This stock was $60, $70 back before the 2008 financial crisis, and it's been steadily declining ever since. So first, the news was out that there was going to be some kind of merger, but then UBS was backing away because they said, look, we can't touch this unless we have government guarantees. We can't buy these assets unless the government agrees to pick up any losses that we may occur, which of course is a great deal for UBS, right? Because heads they win, tails the Swiss people lose, right? Because they're going to take the upside, but they don't want to have to deal with the downside. And so there were some rumors that, okay, the deal is going to fall apart, right? Because they're not going to get this government backstop. Well, I guess the Swiss government caved because, Sunday afternoon, before markets started to trade in Asia, they had this whole deal worked out before the Asian markets opened. They announced the deal. And UBS got what it wanted. It's going to have these government backstops, both by the national government in Switzerland and the Swiss National Bank. And of course, the Swiss National Bank is responsible for the demise of Credit Suisse. Not only did they have 0% interest rates in Switzerland, they had negative interest rates. And that really screwed up banking in Switzerland when you're having to pay to have somebody hold on to your Swiss francs. It really was a disaster. And so this is just one of the consequences of that monetary policy madness. And really what the Swiss bank was concerned about was the level of the Swiss franc versus the euro. They did not want the Swiss franc to get too strong against the euro. Well, that was a mistake. The European Union was doing a lot of foolish things that should have weakened the euro, and the Swiss would have been better off just allowing their currency to appreciate instead of screwing up their economy. It's kind of like, you don't want to mess up the curve, and your buddy is flunking, and so instead of getting an A, you decide to flunk yourself, right? That's basically what the Swiss did, and kind of, having policy for the lowest common denominator. And that's why the Swiss National Bank's balance sheet is so bloated, but not with Swiss government debt, because the Swiss governments are a lot more fiscally responsible than the rest of Europe or the United States. And so Switzerland loaded up on U.S. stocks, right? The Swiss National Bank has a huge sovereign wealth fund full of U.S. stocks, which they should be unloading if they were smart. The Swiss people wanted to force Switzerland to buy gold, and they had a referendum. and it got voted down. Of course, they would have been a lot better off owning gold than these other assets. But in any event, the news that this, bailout rescue package went through, that's why there's some relief. Now, it's not relief for the shareholders of Credit Suisse, because I said that stock closed at $2. These are the ADRs in the U.S. because the stock trades here. Both UBS and Credit Suisse have ADRs that trade here in the U.S. And so Credit Suisse closed at $2. If you look at the stock deal, it's all stock, right? So if you own Credit Suisse, you're now going to get stock in UBS, and no shareholder approval is needed. Nobody gets to vote on this, right? It was an emergency, and so it's happening whether the shareholders want it to happen or not. So UBS is going to be buying it. I think it's around 22 and a half shares of UBS for each share of Credit Suisse. So it values Credit Suisse at around 75, 80 cents a share, something like that. Obviously, it depends on where UBS opens. Maybe UBS will get a pop out of this deal, right? But we'll see. But based on where UBS closed, the Credit Suisse shares, again, are worth about 75, 80 cents. So that's the lowest the stock ever traded. It closed at 2. The intraday low on Friday was $1.75. So if you tried to take a punt, right, if you bought that stock Friday and you picked up some shares at $1.75 and you thought you were looking good, right? Well, if you held it overnight, you're waking up with like a 50% loss. So very risky to try to catch a falling knife when it comes to these banks. But I think it's going to be bearish for other banks now, so I don't think this is bullish news for the bank stocks, either in Europe or here in the United States. Meanwhile, the rally in the gold stocks is continuing in Australia. Northern Star Mining, I'm pointing out this one because it's one of the ones that we own. Actually, our value fund, if you're a shareholder of Europe Pacific Value Fund, we own shares of Northern Star in Australia. It's up 8.5% on the day. Newcrest Mining, which is another gold stock that we own in our value fund, because our value fund actually has an allocation to gold stocks. That stock's up 7% right now. So we are seeing some strength, obviously followed through because these stocks didn't react to the big up move in the price of gold. I mean, gold was up maybe $10 or so during the Australian time zone on Friday. But then we had the huge gain when we came into the New York hours. And again, I expect this sell-off in gold, and if you could even call it a sell-off, because we're still higher than we were when the U.S. stock market closed on Friday. But I think this little $11 decline, $13 now, I doubt we're going to have much more downside. I think this market is going to turn around. We should be over $2,000 an ounce by the time the New York market opens, I would imagine, on Monday. But I think the rocket fuel for the next Fed, the rally in gold, is going to be the Fed meeting, the Q&A, and their decision. Because look, either they're going to hike by 25 basis points and signal that they're pausing, right? They're going to hike and now we're going to look around. I actually think they're not going to hike at all. I think they're going to stay pat, and that's maybe a 25% probability, right? So the markets are still 75% that the Fed's going to hike. So if they don't hike, gold's going to go ballistic. But I think even if they do hike and then indicate that they're pausing, I think it'll also go ballistic. Now, the wild card would be a cut if the Fed actually cuts rates, which wouldn't be out of the question that they did that. And they could rationalize it by talking about how much has changed since, their last conversation, that, this banking crisis has come out of left field. And the reaction in, oil, if it's still where it is, or, they could justify it. My forecast is not that that's going to happen. I'm just saying it's not out of the question, right? I'm not ruling it out. And if it does happen, gold's going ballistic under that circumstance. If Powell says, you know what, we're hiking 50 anyway, and we're going to keep on hiking, and, we're going to have to hike even faster to offset quantitative easing that we're now doing. If they do something like that, well, everything's going to crash.